Hello everyone, welcome back to Ansarkari. So today we are going to start with the next important topic that would be around capital market in India. So we'll be taking up all the important nitty-gritty details, the subheadings around this, and we'll be following the similar pattern as we followed in the previous videos regarding. First, we'll go through all the important topics, we'll try to understand them, and we'll also keep mentioning about what has been the prelims previous year questions or the mains questions on that. And in the end, we'll be taking up what have been the prelims PYQ. So we'll be discussing all of those questions regarding this particular topic. So firstly, it's important for us to understand what is the difference between money market and the capital market. What are the key areas of differences? So overall, both of these are part of the financial market. So it can be divided into two components, money market and the capital market. So already there has been a question on this directly or indirectly. So that is why this conceptual clarity becomes important for us. So financial market, what is a financial market? So it's a marketplace. It can be physical also, and it can be digital or virtual and formal. So where investors, they deal in financial instruments. So what are the different types of financial instruments? So it provides a vehicle for allocation of savings to investment. So when we are converting savings into investment, that we can say key that is done through the financial instruments. So we can say that savings are channelized into investments, and why it is done? Because it leads to get capital formation, asset creation. So that is important for economic growth. And apart from this, the people who are investing their savings, so they get return in the form of interest return, or we can say capital gains is a term that we use for them. So again, these investments into the capital market, they can be short-term or long-term both. So this was again regarding the financial market. So money market, when we're talking about specifically, so extremely liquid financial instruments are available which are traded. For example, there are monetary instruments of short-term nature. So it is important for us to remember that money market always deals with the short-term investments, and it is highly liquid, or we can say extremely liquid, when we compare it with the liquidity of the capital market. So by this word, what do we mean by the term extremely liquid, or what we mean by liquidity? So it is the ease with which you can convert, suppose your asset or your investment, suppose you've invested in a particular stock. So how easily you can convert that again in the form of money. Or if we take up one example of monetary instrument, so that is T-bills, which is treasury bills. The tenure is maximum 1 year. So again, this is a part of the money market, and how easily you can convert the treasury bill again into the form of money. So that is the simple idea behind liquidity, or being extremely liquid. So it takes less time to convert that into the form of money. So on the contrary, when we talk about capital market, so that is particularly for the long-term securities. And recently, when we have been covering the newspaper, important articles and updates around this. So one important update is government has for the first time introduced 50-year long tenure of government security. So that is an example of capital market instrument. Then again, the purpose or behind the capital markets is also to provide an additional and alternative channel for mobilization of funds. So in both the types of markets, in both money market and the capital market, the main purpose is channelization of funds, or we can say channelization of savings. And we have comparatively more, we can say, a range of operational features when talking about the money market. So basic difference between money market, capital market is that money market deals with short-term instruments, monetary instruments. Capital market is for the long-term tenure. So going into a little more detail of the money market, so assets that are bought and sold in the money markets, few examples of that is mutual funds. So such types of questions can be asked in prelims, that whether mutual fund are a part of money market or the capital market. So money market mutual funds, these are different types of mutual funds. So here again, money market would mean that these are short-term mutual funds. You can't invest in them for a longer time period. Then bank to bank loans, again, these are given for like overnight basis or for few hours or few days. So this is again example of money market. So whenever you are looking for money market instruments, so always think about what is their tenure, are they for short term or long term, and on that basis you can get to know, you can figure out whether that is that falls under money market or not. Then certificate of deposits. So again, they have higher interest rate than the savings account, and that's why people prefer in investing in the certificate of deposits. Then treasury bills, as I've just explained, they have a maturity of 1 year, so they are a part of money market. Then commercial paper, very important example. These are also short-term debt issued by the financial institutions and the big corporations. So even big corporations are using commercial papers, like we have government securities which are issued by the government. So we have commercial papers which are issued by the big corporates to raise the, you can say, the finances, the money, or to raise debt in the market, which is specifically for the short term. So treasury bills, commercial paper, certificate of deposits, bank-to-bank loans, and money market mutual funds, all these are examples of money market monetary instruments. So someone who invests in money market mutual fund, it means they are buying into a pool of short-term debt assets such as the certificate of deposits or the treasury bills. So specifically money market mutual funds में जो सब components होते हैं, like in case of when we say, we're normally talking about mutual funds, so we say कि we have a lot of options. The amount, the finances of the people who wish to invest in that particular mutual fund, that entire money is pooled into a single, we can say single fund, and that is invested in that. So where it is invested actually in normal sense when talking about mutual funds, so that is invested into different companies and their shares. So equity shares mein they are invested. And then again, further categories are also exist, like mutual fund we have in case of like gold, also like commodities, maybe you can invest into that. And again, one day back we also talked about the flexi fund also. So in the money market mutual fund specifically, they are concerned with investments in the certificate of deposits and the treasury bills. And the money market mutual funds, they aren't insured by the federal government. So this is very important point. They are not insured, and they are viewed as one of the safest investments available. Although they are not insured, but still they are considered to be the safest investments available, because these are again backed by the government. So we have the government assurance, the government backing. That's why we show more confidence, more trust into all these monetary instruments that we have for investments. So then what are the benefits of money market instruments? So keeping your savings idle with yourself in the form of cash, or even in your savings account. So when you're going ahead with investments in the money market instruments, you'll either get higher amount of interest rate income, or we can obviously say that this would be an additional source of income generation for you. So that is why it is considered better to invest your savings. Either you can go for money market or the capital market, but it's important to invest. So these are highly liquid. You can easily convert that in the form of cash as and when you wish. There are no limitations per se. I would say no strict regulations or not strict restrictions in nature. That is why the redemption period is limited to 1 year. 1 year is their tenure, is short term because of money market. Provide low return on the investment, but they're quite safe trading instruments. So low return on investment, at least like instead, if you're not investing anything, but if you invest, you earn at least some amount of interest income compared to when you're not absolutely investing. So that is another benefit. And money market is an unsystematic market. So the trading is done off the exchange, that is over the counter. So like we have it in the capital market when we're talking about share trading. So that is not, the way we are trading in money market. So that is why it is called unsystematic. We can say it is not easily accessible to the people. It is not, we can say, so digitally present. So that is the thing between the two parties by using phones, email, fax, online. That's how you can basically, invest in the money market. So unsystematic, over the counter, that's how we can invest or trade in the money market instruments. And again, it helps the industries to fulfill their working capital requirements. So in a way, our savings becomes important. So that's why these are important for channelization of our savings for the industrialists, which results into you can say capital formation or asset creation. So this is again one important area of fiscal prudence also, which reduces the burden on the government in terms of how much capital expenditure government would be doing. So since we say that industries would also be coming forward in the form of more capital investment, as we are seeing also that the private sector should increase their participation as far as the capital expenditure is concerned. So this is one way how it can be done, and it can lead to more fiscal prudence, more, we can say, reduction in the fiscal deficit and the pressure, the borrowing pressure also on the government, because government does not have surplus funds. So for even, capital expenditure also, it would have to borrow somewhere, it would have to raise money. So this was all about money market. So if you have any kind of doubts, we can first take that up and then we can move forward. So Prerna, if you have any kind of doubt or you have any kind
No,
of
Manjari.
understanding any topic. Okay. So coming to second type of financial market. So we are actually covering types of financial markets. So first was money market. Second type is capital market. So in capital market, it includes the stock market that we talk about, the share market. Second type is the bond market. So financial regulators, so for the capital market, the financial regulator are SEBI. They oversee the capital markets to ensure that investors, their interest, their money remains protected against any kind of fraud. So fraud in the sense we've been seeing insider trading. Insider trading can be said one type of fraud, but again, somewhere this is also permitted by SEBI also. So if you are not fulfilling the conditions, the restrictions that has been imposed by SEBI, then it would be a fraud. Another example of fraud that of late we've been talking about is the FTX fraud, specifically in the context of cryptos. Here, the promoter of the company, promoter, we use a term for the owner. So FTX, it was an app where it offered you a platform to invest in the cryptocurrencies. So the money that they invested through this broker into the cryptos, that was misused, that was not actually invested by the promoter or through this platform. So this was the fraud. So that is again the regulator's role, SEBI, and the regulator for money market would be. Prerna, can you tell the regulator for the money market who it could be?
Maybe RBI, I don't know.
Yes, it is RBI. Okay, so type of financial market where the government or the company securities, they are created and traded for the purpose of raising long-term finance. This is the first and the most important basis of distinction between money market and the capital market. For long-term finance, we have capital market to meet capital requirements. So that's how we define a capital market. So maturity period is not limited up to 1 year. It is beyond 1 year. Up to 1 year, it is for money market. And sometimes it might also be possible that securities, they are irredeemable. There is no specific maturity. And capital market includes both the dealer market, dealer is basically brokers, and the auction market. So both of them are component of capital market and broadly divided into two major categories, primary market and the secondary market. So Prerna, can you tell me the difference between primary market and the secondary market?
I'm not aware of it, Manjari.
Okay, Oshik, can you explain us the meaning between primary and secondary market when we're talking about capital market? Oshik? Okay, so primary market, we often hear the term IPOs. IPO of a company. So IPO stands for initial public offering, which is done for the very first time in the stock market when a company for the very first time it is issuing its share for the people to buy and trade. So that happens only in the primary market for the very first time. And once it is done and people can actually buy the shares and they can trade in that. So that happens in the secondary market. So secondary market is concerned about trading. So this always happens like it is between people to people. So it is done on daily basis as per the timings of the share market, which begins from 9:15 to 3:30 p.m. And you can go for investments also. So this is a part of the secondary market. So Prerna, I hope the difference is clear.
मांजरी प्राइमरी मार्केट का एक बार दोबारा रिपीट कर दो प्लीज.
Okay, primary market, we often hear this term, you might have, read it in the newspaper also, IPOs. IPO
Yes, Manjari.
coming up.
Public offering.
Initial public offering. So it happens, suppose a company, it is performing nicely and there are certain conditions which it has to complete when we say ki if it wants to get listed on the capital market and it wants to raise the money by issuing shares to the people. So after that, the first step that it has to do to issue the shares to the people for the very first time so that we as retail investors or even FPIs, FIIs, they can invest in that particular company if they have the confidence, if they have the trust that this would be performing nicely in future. So that first, for the very first time issuance of the shares of the company, that happens through initial public offering. If you try to understand the meaning of this term, even by its the term itself, initial means for the very first time, public means it is going to be made available to the people and it is an offering to them. So the very first time thing happens in the primary market. Okay.
Yes,
Yes.
Manjari.
Okay, so fresh securities are issued for the public, example IPOs. Secondary market, already issued securities, they are traded. So if we go by again, just quickly go through an overview of the distinction between money market and the capital market. So money market segment in the financial market where lending and borrowing, it is for the short term. Here it is for the long term. Nature of market, it is informal and this is formally happening. Financial instrument, here the regulator is RBI, here it is SEBI. Financial instruments, for examples, money market, we have taken up treasury bills, commercial paper, certificate of deposits, trade certificates. So certificate of deposits, they are used basically, they are used by the corporates to raise money. And examples of the monetary instruments in the capital market is shares, we have debentures, bonds, retained earnings, asset securitization, euro issue. So this is not in India, euros. Then institutions concerned with the money market, we have central banks, we have scheduled commercial banks, even the NBFCs, non-financial banking institutions. Brokers are also there, acceptance houses. And in capital market, we have again, commercial banks are there, stock exchanges. Example of a stock exchange, Prerna, in India?
Mutual funds, maybe.
No, stock exchange. We have BSE and NSE.
NSE.
We talk about Bombay Stock Exchange, National Stock Exchange. Then NBFCs are also a part of it and insurance companies. And we have one more table. So talking about the risk factor. So in money market, the risk is low and it is comparatively higher in capital market. So even this is not, universally true always because it depends upon the nature of investment instrument that you're choosing. If you're going for long-term investment and you have gone through proper analysis of a company in which you're interested to invest, then it is not so such a high risk. And if you have hedged your investment, then also it is not so risky. But if you're going for options directly, specifically if you're going for buying the options without hedging them, it is the most riskiest instrument that we have in the capital market. And liquidity, in terms of liquidity, money market, it is high because it is for short term and there are less restrictions, there are less conditions. If you want to basically again convert your investment into money. So this is easily possible in money market, but not so easily in the capital market. Even like in capital market also, if you're into trading, everyday trading, then it is like highly liquid. The transaction happens within seconds. But suppose if you are investing in, what are you saying, Prerna?
Manjari, intraday trading.
Yeah.
Is this the same thing?
Yes, it is the same thing. Intraday trading means you have to do trading, you're allowed to do trading within those timings which is fixed by the market. So it is highly liquid. And if you're suppose investing into mutual funds, which has some restrictions of like lock-in period, Lock-in period is, it is a fixed time period for which you cannot convert your investment into money. Suppose if it is for 3 years, so there will be certain penalties if you want to convert it into money, but otherwise it is not so easy to convert it back into money. Purpose of money market is to fulfill your short-term credit needs, and it is for the long-term credit needs. Time horizon, it is mostly 1 year, and it is more than 1 year. Merit is increases liquidity of the funds in the economy, and then there is mobilization of savings in capital markets, so which is important for channelization, and for an investor also, it becomes an additional source of income, and for economy, it is an additional source for asset creation for capital investment. And return on investment in the money market is less because it is short term, and it is comparatively high because here the higher the risk, higher would be the returns, and the longer the time period, the higher would be the returns. So here, again, when we talk about bonds, we always say bond yields. So with the government securities having higher tenure, or the more tenure, as we were talking about 50-year bond yields, the government securities have been issued recently, so they would be having comparatively higher yields. So here the return is comparatively higher when we compare it with the money market. So that's there. And so why money market, capital market, they're actually important for an economy. So these are part of financial market. Why is it actually important? Because they serve as the backbone of the financial system. Money markets, they act for trillions of dollars in assets. There's like trillions of dollars or trillions of rupees, the transaction which happens on daily basis. Capital markets in US, so they finance over 70% of their economic activities. You can, think about how significant it is. It's financing 70% of all the economic activity which is happening there. And these markets, they have the people with the ideas who then again become entrepreneurs and help the small businesses to grow into big companies. So one example of this would be, what term actually we use here, Oshik, for like if small business they grow into big companies. One term which you can specify.
Unicorn.
Yes, right. Unicorns.
$1 billion
Yeah.
stock market.
Yes. And they also give folks opportunities to save and invest for the future. So that is why these are the several reasons why they are important. So we'll keep it this much in this part. So we can discuss any doubts if you have.
No, Mansi.
Okay, so thank you so much for joining on Ansarkari. You can subscribe our channel for such regular and critical analysis on GS3 economy.